rules that are trying to increase taxes mainly relate to investments into residential property. So residential property, the new capital gains tax rules that have come in from April this year will seek to tax non-residents investing in the UK where there has been a sale after April 2015 and a gain has been made. Whereas in the past, the old legislation allowed all non-residents to buy properties in the UK, real estate, whether it's commercial or residential, sell it at a future date for a gain, and be able, if they're non-UK resident, to not pay UK capital gains tax.
So I think let's spend a couple of minutes trying to figure out who are these investors who are coming over into London. If you were to look at the Indian real estate market, until the period 2008, just like as Mario said, nobody kind of lost money. You just made money. Anything that you bet from 1999 till 2008, you did make money. There came Lehman, and the whole market kind of wobbled in through. Right from a perspective that, looking at the size of India, there are actually multiple markets. You've got the whole Delhi area, you've got Mumbai area. These are as good as states itself. So cut to 2011, 2012. The kind of investors that you see coming outbound of India are about 3 or 4 categories. The first category is what we call prestige. So just like a magician, I want something which is big, large, and tells me that I have arrived. So simple. Where do you get that? London, New York. So that's 2 destinations that I want to be. The numbers that I can look at is anything in excess of 7 to 10 million sterling equivalent in either of these 2 cities. And most of these investors are kind of cash down, come through entities, are business people who are 2nd generation, 3rd generation advisors. From a discerning perspective, you also have a huge number of people who have relocated from the US from these sectors who've been coming into India over the last 5 years, who are looking at stepping out again. This comes into a subcategory what are known as practical buyers, who are end users of homes. But the challenge that they seem to be facing, especially in the London market, is that they come with kitties which are sub-million sterling. And as Mario said, it's quite tricky to find a shed for that. And especially coming from the US when you had half an acre home, 20,000 square feet, very difficult to fit yourself in there.
I don't know if any of you have come across the Knight Frank Wealth Report. We recently launched the 2015 Wealth Report, and it stated that India has seen a rise of 166% in ultra-high net worth individuals over the past decade. Now, with that in mind, I'd probably say a large chunk of those individuals have real estate requirements, and London is seen to be an area of interest with the majority of these people. I would probably say at the moment, about 35% of Indian inquiries that have come through in the last 2 to 3 months have been super prime properties, and I'd say another 35–40% has been prime properties between 4 and 10 million.
It would be good to kind of get some comparison between buying a property in India versus buying a property in the UK, especially off plan. How does it might go about?
London is seen as a safe haven for many international investors, and with new build properties in London, they all come with a guarantee of an NHBC certificate. I don't believe you have that in India on new build. And rather than 24 different stage payments, you will have 6 stage payments in London. You also know that putting your money into London, a lot of these individuals feel very safe, and they know that they're putting it into a developer who will adhere and finish the product.
I will probably differ a little bit with you, Ela, here, is that some of the developers in India who actually show you a finished product, show you a far superior finished product than you're most likely going to get. And you're going to be so impressed with the show apartment that you're going to be hugely... Yeah, exactly, it's a show apartment, so you're going to be quite disappointed that after all that wait, what you're going to get. In fact, some of them, which we've also seen, we started measuring because it suddenly looks bigger, the ceiling height is higher. So each of these show apartments is probably half a foot more in size when you write your dimensions. And thank God for the real estate regulation bill that got passed by the Modi government, and that's been on the sidelines since 2011. And I think that's the first step that I think the right positive step to corporatizing that market, to creating an entry barrier which puts, I think, some force on planning and financial discipline.
What's her view on the super prime residents that are coming up with people like Philip Stark, Armani in India? And is that a positive development, and are a lot of NRIs buying that product, or is it mainly locals?
So I remember looking at a lot of high-end product in India probably about 5 or 6 years ago, and there was a big emphasis on branding out there. So you've got, you know, Four Seasons residences, and like you mentioned, Philip Stark and so on. And people do follow the brand, and I think especially with the NRI market, it's something that they're familiar with, so that would be seen as being attractive rather than an unbranded development.
There are a lot of Indian investors who come to London for education purposes. How do you go about guiding them, especially when it comes to selecting a property and then actually investing, whether as a company or as an individual?
If you are buying a residential property, for example, within a corporate vehicle, the stamp duty charges, stamp duty land tax charges are very penal. So, you have to weigh out the positives against some of the negatives. You have ATED implications, so annual tax on envelope dwellings, and stamp duty land tax of up to 15%. It can be, very difficult.
My question is for Deepak. Deepak, we've been always looking at things moving from principle to practice. Post the new real estate bill which has been approved and which has been passed on, where do you see the integration time from principle to practice at ground zero in India?
That bill's been sitting on the sideline for the last 3 years with a huge number of objections from large quarters of the industry, because the ability to comply, or let alone any reality on the state of readiness of any of the entities to perform those activities are limited to probably the top 3 or 4% of the number of developers in the country. So therefore, one of the biggest challenges that the industry is going to go through is being compliant with that bill. But I think it's a position in the right direction. So hopefully, my guess would be about a year and a half before you can see some form of serious implementation of that bill. And I think what you're looking at is version 1.0. There are going to be at least 2 more versions of that same bill which is going to get passed in some sort of 2 to 3 year frequency. I think it's a step in the right direction, and for the investor, for the buyer, as well as from a bank and finance perspective, because it brings about a huge amount of fiscal responsibility by way of escrow accounts where monies get parked and the end usage of money is into projects and not just a whim because the developer saw a nice patch of land that he liked and said, I'm going to buy this out of the money which is investment money.